Hello, everybody. Can you hear me?
Yes, I can.
Yes, you can.
Excellent. Good Friday to everyone. My video seems to be giving me a little bit of trouble. So give me just one moment. Yeah. Hello, everybody. Welcome. I got a little bit of a surprise email from our speaker, and hopefully he'll be joining us. He wrote me apparently a few hours ago saying that he had a home closing and he wanted to delay the meeting by 1 hour. And I just received the message and wrote him back, and I said, that's not possible. So I may be giving him a call here in just a moment to see if he's going to join us or not. Hello, Ryan. Good to see you. Chris, Anthony, Jay, Robert, Tommy, Leo.
Hello.
All right. I'm going to go on mute for just a moment and give our speaker a call just to confirm that he's coming in. Hello, welcome everybody. I am trying to get in contact with our speaker right now. He wrote me a couple hours ago and asked to delay the meeting by 1 hour. And I just wrote him back and told him that was not possible. So we'll see if he shows up or not. But in the meantime, does anybody have anything else that they would like to talk about? Any topics? Or frankly, it's a beautiful summertime. Do you have any real estate investments that you're currently working on, and would you like to share them with the group? Let's start with that while we're waiting for our speaker to arrive. And I'll just open the floor up. Hello, Chris. Hello, Sandeep, Dennis, both Chris's, Alan, Robert. Recognize a lot of people here. Hello.
Hi, Daniel.
Hey, Dennis. You still at Intel?
Now,
Nope. Seems to be more and more
for
common.
now.
Oh, for now you are.
Yeah,
Okay.
for now,
Well,
still
it's
here.
good to hear. Good to hear. All right. So if you have any topics that you would like to share, or if you want me to bring in a speaker on a particular topic, just take yourself off mute and let us know. If the speaker doesn't show up, we'll go ahead with just a club discussion where we open it up to questions. And if you have a question, you want to present it to the group here, we'll get the wisdom of the crowd. There are a lot of people here that have done a lot of real estate investment deals. And I know a lot of you probably are familiar with the names in this group. It looks like a pretty tight-knit group today. So we will we'll open it up. I'm waiting for the speaker to arrive, and so the speaker just wrote me back and said, "Sorry, I can't talk right now." That was after confirming he'd be here. Okay. Well, I actually think that's a first. So I guess it's a club discussion today then. That's too bad. He had some really good looking software and I was looking forward to seeing it. I mean, I can show you, I can point you guys towards where his page is if you want to go see it. His page is Bright Investor. And I don't know the first thing about it other than I accessed his 14-day trial. And basically it lets you put in your criteria. Let me share my screen here. So our speaker is from here. He's got Beardy Brandon on the front instead of his own picture, apparently. But all I know about this is it's a series of software that basically lets you filter down and find your acquisition criteria and then do a market analysis and do kind of a property analysis. And supposedly today we were going to get a walkthrough of that software, but it looks like our speaker is not going to be arriving. So I'm going to open up. Are there any topics that you guys have any questions about or would like to talk about today? If you have something you're working on, just take yourself off mute and go ahead and ask the group.
Hey, Daniel, did you use the software and which market was the best market it told you to
So
go after?
I used their 14-day access and I only used it for one day. And I was actually looking in Idaho because I have an Airbnb house that we have in Idaho just to see what it said in the area. Honestly, I didn't do a very thorough analysis. I was going to wait for the presentation today to really understand how to use everything and to get the full walkthrough. So I haven't done a full analysis using their software, but to be fair, it looks like from the short amount of time that I used it, it looked like it was very intuitive software. It looked like it had, a decent amount of data that it could pull in. And I don't really know what the strengths and weaknesses are of it, other than it looked intuitive to use. Yeah. Is anybody participating in a private equity deal, like a real estate syndication right now, that they like or that they're jumping into and that they want to share with the group?
Yeah, Daniel, this is Alan. I'm in a couple of deals with Asta Realty. They were a speaker with you guys a couple of times, I think.
Yep.
So I got a couple of just small dipping my toe in a couple of deals with them, but they're going pretty good.
Yeah, what's your experience been with like them? Because I'll tell you that I've been looking at their deals, and they are exactly the type of people that I would consider investing with. I just never have happened to have done it. They look solid. What's your experience been with them?
Yeah, they're super professional, right? So
Okay.
they wrap everything up. They got really good customer service. They really present all the deals really professionally, and they've got a good like web user front end, and it shows you the returns you've been getting. They get quarterly updates on each of the deals.
Remind me what market they're in or what area they're in.
They're like private equity for usually
No, I
new
mean like
new
what
builds.
city? What city?
Oh, what city? So
Yeah.
Florida and New York are the two main areas.
Okay.
That's where I got my two investments. That's their main
Okay.
markets.
I think when I was looking at them, they were just New York at the time.
Okay. Yeah, they got a few in Florida now.
So they got a couple
Yeah.
down in Florida now.
Yeah,
Okay, great.
big condo build in Florida I've invested in, just outside Miami, and then another one in New York.
Okay.
What is
And
it?
Aster.
Aster. Okay, I have heard of it.
Yes, Aster Realty Capital.
Is this it? Here we go. Is this them?
Yeah, that's them.
Okay. Okay, so we've got an endorsement here. How long have you invested with them?
About a year and a half, 2 years now.
Okay.
So I've had one, actually I've done three. So the first one closed after 6 months. It went really quickly. The annual rate of return would have been about 20%, I think, on that one.
Okay.
And then I've got two longer term ones. They're 3 years. One's paying 16%, but every year, and then the other one's a 22% annualized return, but it gets paid at the end of the 3 years.
Right. So
there's the two.
are you getting some cash flow now, and then the rest will be appreciation when it's sold?
Yeah.
Yeah.
So one's a cash flow one, and one's a appreciation one.
Okay. And it looks like they have a mix here. They've got a couple of cold storage facility. Most of what they have look like repositionings of either apartment buildings or new development. They're eclectic.
Yeah, they're eclectic.
Okay.
Yeah.
I haven't looked at them in a while, actually. I'm going to revisit them. All right. Anybody else? Is anybody else investing with somebody that I like?
So Daniel, I did put a question in the chat, and
Yeah.
my question was, what's the best way to handle syndications that go south? I was just meeting with one of the groups that I'm in that we do different deals, and he gave me an update, and I think two of them aren't doing very well, and then one of them they paused their distributions because they're going through a regulatory review, whatever the hell that means. But
I can tell you exactly what that means.
so I would love to hear people's thoughts or comments of how they handled this.
Okay, great. So I would say, do you want to give any more details about the situation, or you just want me to talk more generally?
Sure, I can give more details. So
you don't have to give their name or anything. You can if you want, but
I don't care. I mean, they're going south. So one of them was Kai. That was the hotel that was in Tempe.
Okay.
They kept saying, "Oh, it's done." It was, you got in. They built it during the pandemic. They needed to, start managing it and get the run rate for the rooms, and everything's going fine. But their loan came due, so they had to go through that whole rigmarole about getting a loan refunded, or refinanced and stuff like that. So that's where it's at now. They finally got the loan refunded. We have a year on the loan. They had a buyer. Everybody has a buyer. Then the buyer backs out because of something, whether it was changing of the rules or whatever. There was a Saudi investor and he backed out because it just got too hard. So that was one. And then I think the second one in the group that went south was Nielsen Brothers. And this person, he was managing a flip in Berkeley. It was student housing. And I think he kind of took his finger off the pulse. And so his partners kind of just went through and they were taking the money and they didn't refurbish some of the units because they had to buy people out in order to refurbish their units. And then they were going to, rent out the rooms to students. And
they had to. Oh, you mean like there was rent control and they had to offer cash to get the person out? Okay.
Yes, get the people out because some of them weren't students. So they needed to get the people out so they could refurbish the units, and some people just weren't taking it. So at that point, they just didn't follow through on all that. They didn't, and they didn't lease it out. That was the other thing. The ones that were refurbished, they didn't have a very good management company to go back and lease stuff out. So they were
Mhm.
running negative. So by the
Well,
time go ahead.
so go ahead.
I was going to say, by the time the person Nelson, who came into who proposed the deal came back, he realized it was really bad, and his partners tried to take it over from him. So he had to go to court to regain control of the project. So that came out, that had some problems. So now he has control, and now he's trying to make it right. But now he's looking for a capital call to go back and look at stuff.
Yeah.
So,
Yeah.
and then the third one is the one that's going through the regulatory review.
Okay. So do you have any more details other than that? I mean, I have a pretty good guess at what that means, but I don't know 100% what that means necessarily.
So the third one, that one is a senior housing.
Okay.
They say it's in good shape, but they paused distributions. Distributions have been going on for 3 years.
Okay.
But they paused them because of this review, and they say they're going to start again next month. So they've only paused them for 1 month thus far. But they say
Okay.
that financially, they say that they're straight.
Okay. Okay. Well, so starting with the third one first, and you're probably gonna have to remind me some of the details of the first one, but with the third one, a regulatory review is usually something that the banks will do, or the primary lender will do, in order if there's ever any change within the structure of the agreement that you have with the bank. And after working with, several syndications and multiple different banks, I can tell you banks are a real pain in the neck. And frankly, they're big enough they don't have to care whether they're a pain in the neck to you. They can drag on and frankly make your deal really, really difficult. And there's often nothing that GP can do because they're at the mercy of the biggest investor, the bank. So having a good bank that you're working with, that you have worked with before and you have a good relationship with, the GP has a good relationship with, is really something to look for in a syndication. Because what's happened with quite a few banks and private institutions out there right now is that when interest rates went up so much, suddenly, there was a tremendous slowdown in the number of loans they were making, which meant that money was tight all across the board. And I have one property in particular, Parkview, which is in Lincoln, where the bank has had multiple other deals, not our deal, but other deals go back to the bank. And so the bank is underwater on a bunch of their deals. And so what's happened is that even though it shouldn't affect our deal, they've become extraordinarily difficult to work with because they don't want to let any money out the door whatsoever. Even money that we have inside our renovation account, they'll come by and say, we're not going to release the money for the siding project because, there's an outlet cover and an exit sign that need repair. And so sometimes the banks will even be capricious about finding any excuse whatsoever in order to not release that money. And so what a regulatory review often is that if there's any change in the ownership structure, or if there are changes within the deal that you have with the bank will go through a regulatory review. And those reviews are actually kind of costly. It depends on who your bank is. The bank that we have for this property, Pinnacle, told us that if we were to go down that route, and we haven't with that property, but if we wanted to do that, they said it would be between $25,000 to $35,000 to finance the regulatory review. In which case, and for that reason, actually, a lot of the capital calls that you see going on right now within syndications are being done. They could go down the route of getting a regulatory review and then maybe renegotiating the position with the bank. But it actually makes more sense to, rather than going through all the expense of dealing and the time, because the bank will drag that out for months of dealing with the bank. They go to their investors and say, hey, we want to raise, 10%, 14%, 20%, whatever their percentage happens to be that they need in order to finish off their renovations and to shore up the project. So regulatory review basically means that they're in the midst of some negotiation with the bank, and that the bank is, making sure that the deal alterations that are happening are on the up and up from their perspective. So that's what a regulatory review is.
So quick question.
Yeah.
So they can have a regulatory review, even though all of the everything's in order. They can just arbitrarily call for one.
Banks can be really capricious. I have seen banks arbitrarily call up GPs and say, hey, we think that your project is not financed well enough and you need to put 900K into the bank, into the renovation fund. And we'll go back to the original agreement, this actually wasn't our deal, but it was a different deal with the GP that I had worked with before. And they had done everything according to their original contract with the bank. The bank just arbitrarily said, we think you need to have more reserves on hand. So
Wow.
yeah, the banks can be giant pains in the backside, and they can be very capricious, and oftentimes they're spreadsheet jockeys that are sitting there at their cubes and they don't really know what's going on at the property, but they make a decision that makes sense in the spreadsheet, and it might potentially shoot the property in the foot, which is why the general partners have to get onto the bank, and have a good relationship with them and call them and let them know when things aren't going well and hope that the bank responds.
God, that's crazy.
So, yeah, it is. I've gotten to the point where I'm jaded enough with enough banks that I would not work with one unless I knew they had a great track record. There are some banks out there that, particularly since interest rates went up and money got tight, they just became extremely hard to work with all of a sudden. Kind of like, just like GPs, there are some that are good out there and work well and do well, and some that aren't. And the banks are the same way. So it's interesting. So they all react in different ways. Some become easier to work with. Some become a real pain in the neck. And then that gets passed on through in kind of a telephone fashion to the GPs and then the investors and what happens in telephone. Nothing is quite straight.
Right. Daniel, is there any change from, the term spreadsheet jockey, so to speak, in the concept of just, crunching numbers, bottom line, versus more predictive and awareness that has more AI included in it from the banking institutions? Because banking, the big banks are investing a lot of money to improve how much money they can make through AI innovation. Is that not showing up in this space?
It's hard to say because they're probably using AI in a lot of different ways. But honestly, I think the fruit is a little lower hanging than implementing AI. A lot of times it's just do you have good conversations with the people you've
Got
lent
you.
money to, and I think a lot of times it can boil down to is the person obviously at their job has a lot of different demands and a lot of different pressures, and they have their responsibilities that they're responsible for, and that doesn't necessarily always line up perfectly with how does the money get. So in simple things like, for instance, I've seen that general partners often want to get reimbursed as quickly as possible. So the way it works with the reimbursement accounts and syndications is that the general partners and the investment itself has to pay out of pocket, to do the renovation, and then they submit the invoice and all the paperwork from the contractors to the bank, and the bank will then reimburse you from your own renovation account. So when the project is being when capital is being raised for the project, some of that capital goes into a renovation account that the bank just holds. So the bank will hold, $1 million worth of renovation money. And then the property itself, and therefore the GPs and all the investors and the LLC that has to pay out of pocket for the renovations, and then they get reimbursed. Well, when I've seen people get delayed on reimbursements because the bank doesn't like to do a whole bunch of smaller transactions. They don't want to reimburse, $1,000 for this repair, $2,000 for that one, $5,000 for this one. They want to bundle it up into $100,000 check. And so what'll happen is that renovations will take place for, painting a room, which is, a couple $100, maybe $1,000 for a whole apartment, something like that. It's a low ticket item. And then the painters have to sit there and, wait. They can either be paid out of the operating account budget of the property, in which case then the property has to wait, or if they've done that a number of times and they can't pay out of their operating budget, then the property has to wait to be reimbursed by the bank. But the slowdown happens when the bank comes back to them and says, hey, we'd like you to do 20 more of those so that we can bundle them all together into a single payment for you. And by the time 20 of those happen, the person who did the first painting of a room is sitting there going, where's my money? I'm not going to work with you anymore because you haven't paid me. And so it's a balancing act between, the demands that are best for the contractors, investors, what's best for the property and what the bank thinks is best. And a lot of times there's a lot of back and forth on them. I hope that cleared things up. There's a lot of work that goes into it. I'm still on, right?
Yeah, you're still on.
Okay.
Yeah.
Great.
I think Anita went on mute, but I was going to say that was a very helpful explanation, and that also that there are others making money, holding on to that money, right? The bank is holding on to the money.
Oh, yeah.
Right. And
The
so
bank is holding on to the renovation account, and they are, making money on holding that.
Yep.
So they're
Yep.
incentivized to not give it out.
But this actually, what you just explained, helped me understand something, because I have in my side business, I have an interest in a commercial landscape installation business,
Mhm.
and there's been a recent issue with delayed payments, which has been
Mhm.
causing some cash flow issues. And I think some of the properties have a different finance system for their refurbishment right now, and that's even impacting externals. So this is
Yeah.
helpful for me in yet a different way.
That's just one story. I have heard, almost every time I hear there's a problem, it's a different kind of unique scenario. We recently had one, and we just got this one resolved, and it didn't create a huge problem, but it created a delay. And this was what was it? It was I forget which contractor, but it was a contractor who needed to get paid, and we submitted the reimbursement to the bank. And the bank took, of course, 3 months to get back to us. And when they did, they sent the money to us, but they were supposed to send it to the vendor. And of course, on our side, we followed up, and the vendor was saying, "Oh, we're not getting paid. We're not getting paid." And we call the bank, and they'd say, "Oh, we haven't issued it yet." But when they actually did it, they sent it to us rather than to the vendor, and they sent it in a big lump sum along with multiple other items. And so we didn't realize for a little while that the vendor didn't actually get paid. And so when the vendor then came to us and complained about it, we went back to the bank, and we went through and figured out what had happened. But it was very clear in our original contract that the bank was supposed to cut the check directly to the vendor. And sometimes the bank doesn't realize. I've seen that happen a lot of times when the bank is supposed to directly pay the vendor, and they will sit on it or issue it to the wrong group, and that can be frustrating too. But there's all sorts of little.
Yeah,
Dealing with the bank is not fun.
That was a great explanation. You made me realize that I thought working with the city was hard, but I think working with banks are even harder.
City's not great. It's actually in most of my personal experience, the city has been easier than the bank. I will actually say that.
All right, so the last two, just syndications in general that go bad. Do you have any recourse, or do you just cut your losses? Do you ask for something that you can write off in your taxes? How do you handle those?
Yeah, so I mean, from a legal perspective, the limited partner doesn't have recourse other than to implement reputational damage, basically. Go out there and tell everybody that these people are scumbags. so there's the GPs are and the general partners are very it's a very heavily regulated industry. There are exact rules on who gets paid when and where. And honestly, for the most part, the lawyers are the ones that kind of say, hey, you're paying this person, then you're paying this person, then you're paying this person, and this is the order that it goes in. So the first lien position, the bank loan, always has top priority, and you always have to pay that off first. And then any mezzanine loans or secondary loans that are there also have to be paid off. And along with those, any liens or judgments that are on the building then also have to be paid off. Once those are paid off and the debt is paid off in the building, then the people that have a preferred equity interest, they're the next in line. And then lastly is the common equity interest. And that's what most LPs are. They're the common equity. And then the general partners are actually a common equity type, secondary type that gets paid after the limited investors. And so there's a very precise order, and it's, I think, exactly the same order in all 50 states. There are some differences sometimes in like creditors and vendors, and then that's when you let the lawyer handle it and draw up what you're supposed to do. And is there any recourse? Yeah, I mean, basically, it's let the next people know, that it didn't work out for you. Some investments go well, some don't. It's a lot like, could you sue Intel for their stock falling? Well, you can, but will it have any legal standing? Maybe. Probably
Well,
not.
the last attempt did, right?
Yeah, the
Yeah,
last attempt at Intel did. That's I'm actually not too familiar with that story, but what was the reason? Why did it work for them?
No, it did. So, what I'm saying is that the investor litigation did
Yeah.
not end up right. It did not, and
Oh,
I think there was enough good faith proved on the Intel side that there was not a sufficient case to go forward.
yeah,
That was my take.
it's really hard to prove that the people were malicious in doing it, and they might be incompetent. It might be that the market just didn't go their way, and that's not necessarily malicious intent. So it's there's a strong barrier to proving that that there was wrong or fraud done. And if there is fraud done, then as a limited partner, you have a great case. And if you can, if here's one area in particular, if they took funds from your investment and used it in a different one of their investments, that is financial fraud. And I actually know a couple of people who have made that mistake, and those general partners went to prison for it. And in addition to being indicted with fraud and paying out a whole bunch of penalties to their investors. So, if there is a case of actual financial fraud, then that's probably when an LP has the best chance of litigation. But short of litigation, it's really, working with the general partner, being on a good terms with them. But the general partner is just going to follow whatever order the lawyer tells them to pay them out in. So, yeah. I don't know. Any other thoughts or questions there? I haven't looked at I'm still sharing my screen. Sorry about that. All right.
Daniel, I had a topic question for you.
Yeah.
Do you have any familiarity with the short-term rental tax strategy where you can use losses to cross over from passive into the active stream against W-2?
IRS code 429, the passive activity loss rules. Yes, I love them. They're great. So I've actually done this, and I got a huge tax write-off. What I did was I had some friends who were also multifamily investors. And so we wanted to buy a vacation house that was kind of near to Schweitzer Mountain in Idaho. The other two are skiers. I kind of wish I was a skier, but I'm not. So my family doesn't do that too much. But we got a little like 4-bedroom house in Sandpoint, Idaho, and the three of us, 3 families, went in 1/3, 1/3, 1/3. Actually, I went in 34% because the state wouldn't let me divide it up into 1/3 of a point. But so I came to them, and they were actually full-time real estate investors, and so they were looking for income. They actually had plenty of tax write-offs and tax depreciation. And so what I wanted to do is I wanted to use the passive income activity rules in order to reduce my Intel income. And so that was my goal. And so the way I did this in combination with my CPA, who advised me all along the way. So make sure you've got a CPA who knows the rules. And so here's what we did. I said to my partners, hey, my wife and I, we will manage the property for free. And it's usually if you have somebody managing your short-term rental, it's like 15 to 20% of monthly income.
Yep.
So it's expensive. And so we said we'll manage it in free for perpetuity for the lifetime of the investment. But in the operating agreement, I want you to assign all of the depreciation to us. And they said, hey, great. We don't need the depreciation. We actually have more than we can use already because we're real estate professionals and have other properties. So we don't need the depreciation, but we certainly would love not to have to pay you a management fee. So they assigned all the depreciation to us. We purchased the house for $675,000. We put around 200 or so down, and each family contributed $80,000 to the partnership. So we had like a $40,000 to $50,000 operating budget to actually run the property. And we also bought all the furniture from the previous owners, so that was nice. We didn't have to deal with that. And then all the depreciation was assigned to my wife and I. And so then I went to my CPA, and the top 2 rules in the passive activity losses that most people here would qualify for, and it's been a little while since I've looked them up, but I believe they are, if you spend 500 hours or more on the property, you qualify. If you spend 100 hours or more on the property, and you spend more than any other person. So you might be competing with your cleaner there, but if you spend slightly more time than your cleaner and it's more than 100 hours, then you qualify for these rules. And basically what these rules let you do is they say, hey, you've worked enough on this project that this is actually active income. So we're not going to treat it in the passive income bucket. We're going to move it over to the active income bucket. And what that meant for my wife and I is that we had depreciation that was coming in the active income bucket, and I could use that to offset my Intel, taxes, my earned income taxes.
Yep.
And so I went to my CPA then, and I said, hey, let's do a cost segregation study. And I paid him. I think it was about $1,500 to do the cost segregation study. And he actually did it over Zoom. He hired a person to go out there and basically walk around with a camera on the property because he lives out in Atlanta, and so and the property's in Idaho. So he had a person walk around the property with a camera, and he did his cost segregation study. And we ended up with being able to accelerate depreciation. And at the end of the tax period, I had $100,611 that I could write off of my taxes, and I could reduce my income by, and that worked out great. It was a great tax deduction for us, because my problem at Intel was, income taxes basically.
Yep.
So I was able to reduce those quite a bit. So the section 429 in the IRS, and let me point you towards, this is my CPA. That was
going to be kind of my follow-up too, because I've looked into it, and this sounds great, and I'm in the exact situation you line up to, right? The challenge
Yeah.
I've had is finding a CPA that's like not super conservative. Like they've kind of, I brought this up to a few and they're like, oh, that seems crazy, right? And so
He actually spoke in the club like a month ago, but
Oh, okay.
so this is him right here.
Okay.
He's great. He's super helpful. He's like he has his own little tax club that's kind of like the alternative investing club. So he's very friendly, very approachable. He runs educational talks every week.
Daniel, you're not
And I-
sharing anything.
I'm not sharing anything. Thank you.
Yeah, I don't know if you're gonna paste it in the chat or something, maybe. Yeah.
Nope. Here it is. There he is. This is his URL. And just tell him he and I know each other really well. Tell him I sent you his way. I don't get anything for it, but I don't know. He says thank you.
Cool, thanks. Other question for you. I mean, we talked about material participation. Were you in Idaho like to do that maintenance and everything?
I was, yeah.
Okay.
Yeah, I did spend a fair amount of time. We spent, well, in the initial setup of the house, you usually meet the material participation.
Yeah.
And just kind of, making sure the furniture's in and making sure that the place is well stocked and you've got towels and you write up your little manual of all the things to do in the area for the guests. And you end up spending probably 100 hours on it.
I love the area too. So the funny, side note is my parents live in Sagal too, and so I've looked up,
Oh, yeah.
I've looked in that area for investment and stuff too. And like you mentioned, being near Schweitzer is a great plus for the rental. I'm sure.
Yeah, it's nice. Let's see. He's got a bunch of resources. Yeah, he's got like a tax planning course essential here. And and I'll say too, he's not really a syndication tax attorney. He tends to work with people that have rental houses, short-term rentals more, and he can handle K1s if you're a passive investor just fine. But if you're a general partner, he's probably not the guy for you. But if you're a limited partner doing short-term rentals or rental properties, he's great.
Gotcha. Yeah, and I was looking for this seemed like it'd be a good kind of rinse and repeat thing every year to kind of do this with a new thing and continue to take that, that upfront losses, for a new property every year would be kind of cool.
Yeah. Just keep rolling that forward.
Yep.
It's great tax strategy. All right. Let's see. Anybody else?
There was a question in the chat.
Oh, okay. Opening the chat. How expensive is my CPA? He's a little more than I would like actually currently right now. He charges around $200 a month per LLC. And as a syndicator, I've got a number of LLCs. And so I need to find a way to kind of bundle it and bring that price down. IRS code 429 is you'll find 7 ways to qualify for passive income deductions or passive income activity regulations is I believe what it says. He costs, but he also negotiates it with each person. And so what I pay is probably not what somebody else would pay. But I think that's kind of his standard rate. It's like $200 a month per LLC. And he saves me more than that. So it's worth it. I wish he wasn't quite so expensive, but he does save me more than that. And I often negotiate him down quite a bit each year. So he'll come and hit me with the number and then I bring him down a little. All right. Any other questions?
This may be off topic, so just shoot it down if it is. But
Yeah.
I'm wondering within the real estate realm about specific investment strategies that are for medical facility expansions.
Okay.
I know there is critical need in many areas within the U.S. right now with aging baby boomers, etc. Anything in that context as far as what might be there, not there, good, bad, However you want to go, Daniel.
Yeah. So, well, we have had a couple of, you're talking about like senior living facilities, right? Is that what you're referring to, or are you talking about medical offices and expanding them?
Am
Oh,
I
did I
off
lose you?
mute? Am I off
Yeah.
mute?
Yes, you're
Okay.
off mute now.
So actually, all, not just the senior living, that is one, because there is a shortage for like long-term dementia care, memory care, etc. But also the rest of the infrastructure, in terms of offices, in terms of clinics and etc. Yeah.
Okay. I think the shorter answer is I need to find a speaker in that area, and I've actually been aware that that's something we haven't covered as much in terms of medical office investment.
Mhm.
We've had a couple of speakers come in and talk about senior living, and some of them, like John Hauber here, he does syndications. So if you want to get into a syndication on a senior living facility, he that's his bread and butter. I've actually talked to John Halpert. I've never actually invested with him, but I actually love him as a person. He seems like he seems like a very straightforward and honest guy. He's a little dry and kind of
Good with numbers
I'm
then.
I'm kind of dry too, to be honest. but he's very personable and very friendly, and he seems like a very trustworthy guy. And so I like him a lot, but I haven't personally invested with him. But if the right opportunity comes up, it's actually something I would be considering for the club fund. So check him out. We've had a couple of other speakers. You can go into speakers here and search for senior living and see if some pop up.
Yeah, I know. I think there were a couple months that
Yeah,
probably
if I can
didn't
spell
make
it.
any. So
Okay.
okay.
In
Got
terms
it.
of medical office, I'm sure there are probably specific, tax laws and deductions you can get for those. We need to have a speaker come in and speak on that because I'm not as familiar with that area. I actually do have a friend who's a dentist who recently expanded his dental office and purchased the building and is going through that process. So maybe I can talk to him and see what his ideas are in the air on that topic.
That
Or if
sounds
anybody
good.
else has any suggestions, send them to me, Daniel@alternativeinvestingclub.com. Hey, let me also, while I'm asking you to email me, let me give a plug for anybody who would like to join our leadership team. Um, I need help running this club, and honestly, like right now, I'm on a family reunion with my wife's father's side of the family, so you can see I'm not home right now, but it happens on occasion where I'm not able to be there on Friday. And it's great to have other people who are able to step in as the moderator role. Thank you to Anita for doing that in the past. But I would love particularly help with finding other speakers and with particularly social media. I'm not a marketing person. Like I said earlier, I may not have the funniest personality, but I have tenacity and I'm good with numbers, which is why I'm an engineer. So I would love to have 5 to 6 people to help me out on the Alternative Investing Club's leadership team. And all it is, meeting maybe once every 2 weeks, um, emailing each other whenever we find a speaker that we think would be great, having somebody to help out with posting the social media, and then helping out with any other miscellaneous things in order to keep the club going. I actually want to get this leadership team to the point where if I ever need to step away from the club, it would continue to run without me. So if you're interested in that, let me know. Oh, and then did I fully answer your question?
Oh yeah, you got me going.
Okay,
That's
great.
good.
Yeah, we could definitely use a little more advertising. Last week we had 70 plus people in the group. This week it's down a little lower. And it's probably because I don't have regular advertising that I don't know why that is.
I have well, and I don't think you have. You haven't done a minute like a minute survey after or something like that for attendees that uh you know is this time always good? What brought you here this time? Something short. And then
Yeah.
over time, you've got some data to also be able to assess how people are prioritizing slash, what's drawing them in, right?
Right. Yeah, right now, all of you I know clicked on my email because that was the only way the link went out. or we're on the webpage. The webpage has the link too. So, but yeah, I should be sending out more minute surveys, absolutely. And that's the sort of thing we talk about in the leadership group. Hey, let's send out a minute survey and figure out, how we can encourage people to join. Right now, it's word of mouth, so share it with a friend, particularly if you get value here.
What's your timeline for kind of putting together that leadership team entity?
Just email me, and we'll start adding people to the group. We have had that leadership group kind of get bigger and smaller. Right now, we don't have one. Oftentimes, we'll have like 1 or 2 people that are kind of helping me, but I really like to regularize it into a structured thing.
Got it.
Yeah.
Thanks.
All right, we've got 10 minutes left. Any other thoughts, questions?
So Daniel, I would like to just throw it out there. Like, I would love to hear from the audience if they have been involved in syndications that they would highly recommend. At the beginning, we talk about the Asher Capital Realtor syndication. So I would love, maybe even a list of a few that are really, really good for people to check into. And I would hope that people have vetted them prior to recommending them. So.
And too, in order to get a whole bunch of them in here, why don't you just put them in the chat? You can type in the names of people that you have enjoyed investing with. And if you want to come off mute and speak, you can do that too. Put Asher. Let's do a quick survey right here. How many people here are interested in, and I'm going to name a couple of different investment types. Short-term rentals, put a 1. Long-term rental homes, put a 2. Syndications of various types, put a 3. And if there's something else, go ahead and just list that in there. Let's see what people are doing here. So long-term and short-term, it's a lot of it. Debating. Okay, short-term and syndications. We've got a few of those. Land flipping. We've had a couple of people, Leo, on land flipping here in the past, particularly the Deatons. And we've also had, what's his name? He wrote Dirt Rich, and he's a well-known land flipper. But we've had a couple of talks on land flipping. Corfu Capital. Do you feel like coming on and talking to us about them? Name? I don't know who they are. I haven't heard of them before. You don't have to if you don't want to.
I've been
I'd like to go to Corfu.
Oh, sorry.
I said I would go to Corfu. It's a beautiful place.
So it's a LLC in LA, California, and I have some connections with them. So I invested with them in 2022, and I'm a limited partner with their firm. So I don't know a lot of the details, but so far I've been really happy with them, and they're supposed to. We acquired a property in Tucson, Arizona, and we are supposed to sell the property in 2026. So yeah, you can check their website out. I'm actually driving and attending the meeting, so I couldn't share the link.
Okay, no problem.
But I can forward that later.
Yeah, stay safe.
Thank you.
Hi, Daniel. This is William, Daniel.
Yeah.
I had invested in United with United Oil Exploration, and I was pursuing a tax, trying to improve my tax situation. So that was one of the other ways that was one from one of the club speakers that came in.
Okay, United Oil Exploration.
Yeah, yes,
Is
United
this them
Exploration.
right
That-
here?
Yes, that's right.
All right, great. I'll take that and put it in the chat as well for everyone.
How did that go? Are you getting irregular income from that? Just
Yeah,
curious.
I'm getting regular income. Well, the first benefit is the tax is because they take that straight off your W-2 and improve your tax situation. And then now I'm receiving regular income, and it's until the oil wells runs dry.
Mm-hmm. Hillary and I have recently invested in some oil wells too, and they're providing income. It took one of them a long time, a little longer than it should have, to start producing, but it's now producing and giving good income as well. So it's a good asset class. All right, so Corfu Capital, United Exploration, United Oil Exploration. And then I was just sharing my page also for the land flipping that we've gone through. So it's been a little while since we've had one, but we've had Mike and Lydia Deaton back in July 9th of 2021. And they came in and spoke to us about land flipping. And share my screen here. For those of you who don't know, land flipping is basically sending out a huge number of mail to people that basically you look at the county records, you find all the vacant land, you try and find as many contacts as you can, you send out a bunch of mail to them and say, I will buy your worthless land for 10 cents on the dollar. And then you turn around and advertise it as, try and figure out what people want with it. Maybe it's a dirt bike area, or maybe it's just vacant land and for a homestead, or just, I've seen people sell actual cliffs, which is crazy. I had this one person who I knew that bought a cliff, and then he sold the cliff, and you buy it for 10 cents on the dollar, and you sell it at 60 cents on the dollar, and you make money. I don't tend to like this personally as a strategy because there's no value add really to it. You're just shuffling cards around, which I don't know, just philosophically, I like my businesses to have some sort of value add that's like growing the community, or adding value to the economy and to people's lives. But this is definitely a good strategy if you can buy low and sell high, or sell medium.
It's actually just a different version of stock in some ways, right?
In some ways, yeah. I
Or
mean,
futures, yeah.
I think a company has the potential to add more value to the overall economy than just a piece of land that's not used. but yeah, there is a certain amount of buy low, sell high, and you as a person doing that are not adding anything to it. All right. See if I can find the other one too. Any other topics? We've got 3 minutes left.
Well, this is probably more of an open, but I was going
Yeah.
to say, with so many sweeping changes this year at the federal level in so many different ways, having somebody that might be able to give an update a bit later in the year, that one big hit can be in terms of tax, right? Tax structure changes and things, but also some aspects of what that might mean for changes in some local economies. Just kind of maybe almost a year in review, but the implications in terms of everything from real estate investment in some areas, where there's been a lot of layoffs, or a lot of changes in funding that's coming into the area, could go a couple different directions.
Yeah, yeah. I think, we had a person on, 3 weeks ago that talked about the big beautiful bill. And there were
I
actually
missed it.
there were fewer changes for real estate investors than I thought, but the really big one, of course, is the coming back of 100% bonus depreciation. And with the previous the 2017 tax bill that passed Congress and kind of brought 100% depreciation up, it had a sunset provision where for the past 3 years we've been losing 20% of that depreciation. I think this year we were at 40%. So 2023 went into 80 and then 60 and then 40. And it was going to sunset in 2027. And now 100% bonus depreciation is back in the law, and there's no sunset provision. And so real estate becomes a very tax-advantaged investment, until the law changes again. But yeah, which I don't honestly see that there's a lot of pressure to change it. At least that provision.
Got it. Okay. Daniel, I am just realizing I don't think I have your email right now.
Oh, well, let me put it in the chat.
In the chat window. Yeah, because I was just gonna.
And of course, if you have, the link to the club website, which I definitely need to update with the latest speakers. So I think the last time I posted a speaker was the end of May. So I owe you about 12 or 15 different speakers that need to be up here. But if you have this email, if this address right here, it's just Daniel@Alternative Investing Club.
Okay, got it.
Oh, Donato, you missed out. No talk for you today. Anyway, everybody, thank you so much for being here. We will see you next week. Like I said, we are booked out all the way into next year with our speakers. There's a little bit of room for change if somebody cancels, hopefully not at the last moment like our current speaker, but send any speakers that you're interested in getting into the lineup to me and I will check them out, and I'll see you next week. Have a wonderful week.
All right.
Thanks, Daniel.
Thank
I
you.
took myself off mute to say thank you, Daniel.
Thank you.